Thanks for staying tuned into Business Lunch on CNBC-TV18. And now let's move on and talk about Rupee, because that's crossed 85 mark to the dollar. And even as all currencies fall in the face of a sharp rise in dollar following the hawkish talk by the Federal Reserve, Latha is joining in with us to tell us what's happening in the currency market. Good afternoon, Latha. 85 is the rupee is what we're watching out for versus dollar.
We've long been waiting for that 85 mark to be crossed, and it looked like only the Reserve Bank was standing in the way. Finally, with the entire globe almost now depreciating before the dollar, the rupee was allowed to depreciate by the RBI as well. The depreciation across the board in Asia has been between 15 and 75 bips, percentage points, as it were, with Chinese yuan almost touching 7.3, and usually India goes in step because you don't want a Chinese influx of goods into your country. The reason is, of course, that the dollar is strong. Dollar index has crossed 108.1 was what it touched, and everyone was saying even at 107 that it was too high. So this was unexpected. Basically, the market was priced for the Fed reducing the number of cuts from 4 forecast for 2025 to 2. But they somehow expected that the Fed won't be in step with the market, and the Fed will actually announce 3, cutting from 4 to 3. So the fact that the Fed just fell in step with the market and reduced it to 2 is something that the market has been surprised by, and that perhaps explains the higher than expected rise in the dollar and fall in other currencies. Now, the long dollar positions in the market in India seems to have gotten settled in morning trade, and the Reserve Bank didn't have to do much heavy lifting, is what dealers tell us. They perhaps were there in the market but did not supply too much, didn't try to stop the depreciation. But now there isn't so much of dollar flows or a demand for dollars anymore. So that 85.07 seems to have been quite a stable point for a better part of the morning trade, at least. One must remember that there is a bit of a doubt now over whether the Indian current account trade deficit for November was really as high, because there is a talk that gold may have been overcounted and the import was not $15 billion. That is also adding in favor of the rupee, and the depreciation has not been very sharp in the market. But that is only for the moment. The expectation is that over the quarter, the rupee will gently depreciate towards that 85.50 mark. And for the end of the year, a bunch of brokerages are calling for 87 rupees to the dollar. All that thanks to, of course, expected tariffs and trade disagreements between countries after Jan 20th, when President Trump takes over. I just want to add a word on what's happening in the yield market as well. We've seen the Indian yields, 10-year yield, also rising to about 6.78. Remember, that is a full 10 basis points higher than what the yield was earlier in December. It was 6.67 and now 6.78. That also is because the US yields have gone to 4.5%, something that was not expected. And that again is because the Fed was expected to cut down the number of rate cuts for 2025, but not by so much.
Okay, Latha, thank you so much for that in detailed explanation on rupee, as well as in terms of watching out for yields as well. But let's move on and